Let's have a discussion on the fixed income markets, where traders at UBA say they expect the bearish sentiments in the Treasury bills market to continue, barring any significant liquidity outflow. Meanwhile, the Debt Management Office allotted only 709.62 billion naira in Wednesday's Treasury bills auction. Fahad Aliu, fixed income trader at UBA, joins me for this discussion. Fahad, we're seeing the bearish sentiments continuing in the fixed income market, but let's look at how the market has fared so far this week, and then also Wednesday's bond auction, Wednesday's Treasury bills auction. Talk to us how the market has been so far.
Good afternoon, Aki. Thank you very much. So throughout this week, it's been a very, very bearish market in the Treasury bills market. We've seen rates go as high as 16 levels, 17 levels currently following the auction yesterday. Yesterday, there was a 700 billion on offer from the DMO, and a total of 709 was offered at the end of the day. And we saw stock rates print as high as 17.5%. This shows a significant increase of about 147 basis points from the last stock rate, and it shows a clear direction of where CBN wants rates to go. We can see that the DMO has a lot of borrowings to do. Also from the MTF that was approved yesterday, 20 trillion. We can see it's obvious they need a lot of money, and rates are going to definitely continue to trend upward as we go into the end of the year and as we begin the next year.
Of course, I'm sure you heard my conversation with Egi earlier, looking at the fact that the government is looking to raise about 20 trillion naira in terms of a budget deficit. But let's look at how the markets is responding to this now in terms of the appetite of investors, to adhere to government's borrowing, and then also where rates are.
So investors are requesting for increased yield on their investment, especially on the Treasury bill side, with the new tax laws that are being involved in the withholding tax that will be taken out of the Treasury bills in interest. We see now that investors are requesting for more yield, and as a result, we are seeing rates going very, very high, and it's skyrocketing. Same with the bond space also. We've seen rates on the middle of the curve going as high as 16% levels now. We've seen 2033, 2032 trading at 16 levels compared to 15 levels last week. So we will continue to see this definitely going into the end of the year, because investors are definitely going to want to make up for the taxation on the Treasury bill side. And at the same time, because of the signal we are getting from the government, we know that they want more, and we have to take advantage of that.
All right, let's talk about the signals from the government. Do you think the government will be able to meet in terms of the appetite of investors, looking at where they're coming from in terms of their borrowing plans?
So not necessarily. However, with attractive yields on the OMO space throughout this year, we can see because of the attractive yields, we've been able to bring in foreign investors, lots of them. So, and the demand has always been high since then. We believe the same thing can also be implemented going into the new year. With attractive yields, investors are definitely going to come in, and I'm sure they will be able to do a lot more than what is expected.
All right, let's look at the government's borrowing plan as well in the Treasury bills. They hope to conduct Treasury bills auctions on the 10th and on the 17th of this month. Talk to us as to what to expect from these auctions.
Okay, following the auction, the successful auction yesterday where they sold 709 billion, today the CBN has also issued another circular. The next auction is supposed to be on the 17th of November. They have reviewed the amount that we're expecting on the 17th of November, and now they are offering a total of 700 billion. And also they are going to issue another Treasury bill again on the 10th of November. A total sum of 750 billion will be on offer at that auction. Following what we said earlier, it still shows this, the signal that they want to borrow more. 1.4 trillion more is being borrowed now, and we'll see what they're going to do, before the end of the year. Especially also, we have another bond auction. The last one, a total of 600 billion was offered, was issued, and we expect the same thing, the same sentiment to continue at the December auction.
All right, let's look at how, let's get your outlook for the markets now, looking at the fact that we're wrapping up the fourth quarter of the year, and then also we know that early first quarter in the year in 2026, or first quarter in every year, the government is always heavy in terms of its borrowing. So what are your expectations looking at this year, looking at the calendar now that's just been released, and then what should we expect coming first quarter of next year?
Okay, so like we discussed earlier, as far as the rates and yields are concerned, we are expecting the yields to go higher than where they are currently, as high as 17 levels, 18 levels, especially on the Treasury bill side. With two new auctions being issued, investors' demand has reduced slightly. However, they would want to make CBN would want to make up with it with the higher and more attractive yields. So we see yields going as high as 17 to 18 levels, in short term towards the end of the year. And of course, at the beginning of next year, it's going to continue due to the heavy demand by the government.
And on the currency side, what are your expectations? Do you still see us maintaining the 114 level? 114 level?
Yes, definitely. If you look at the MTF, the projection for next year is 1512, right? This week so far on the FX side, we've seen rates move from 1,443 to 1,450, and currently yesterday it closed at 1,447. And today we've seen, some demand also in that market, and we will expect to see more demand going into the end of the year and at the beginning of next year.
And we hope to see how the market reacts, looking at how we're wrapping up the year. And then also, let's not forget the fact that there's a lot of Christmas spending this period. And then also January, you have school fees and other expenses as well. Anyway, we'll keep a tab of what's happening. That's Fahad Aliu, fixed income trader at UBA.